Greetings, everyone. Do you find that you're having trouble getting accurate entries and find yourself getting stopped out way too often? Well, this video is for you. In this video, I'm going over where to place your stop loss for optimal entries, for optimal trades, so that where you place your stop loss, more times than not, the trade will go in your favor because you are marking your levels properly. So let's get right into it. What do we see here from this point off the bat? Number one, price is retesting a 15-minute bearish fair value gap. So we'll put the 15 minute here, tapped into, and what do we have here? So on the 15-minute, rebalance to this bearish gap, inverse this bullish gap, and we have several lows below here. I mean, look at all the lows here, clear sell side that price can gravitate towards. Now, this is good to find the direction in the market, the likely direction, the likely draw, but placing your stop loss is what matters most. Because you can enter a trade and get the direction right, but it might run your stops one more time before going in that direction. So how do you know where to place your stops in the optimal area? Well, it starts with here. First of all, you have to get the direction right majority of the time. And here, very clearly, we take these highs here on the 15-minute, inverse this bullish gap, form this bearish gap, rebalance to the gap with clear draws below for price. In my head, okay, clearly we're more likely to head lower than higher. So from that point, marking out another, we have relative equal lows here that we'll just mark out. So that's another draw on price. So all of these lows here, look at all this generated liquidity. Price will more likely than not gravitate towards these levels. And so our job is to find the entry within here. So where's an optimal place to place your stop loss? Well, here, when you get the rebalance, you're looking for an internal sweep here and then a move to the external draw. What I want to do is find an entry after we've gotten that internal sweep and place my stop loss above that high, because that's an optimal place for price to not return. If price wants to head lower and it makes a run on those buy stops, an internal sweep, and then reverses and you get your entry, if you have the direction right and the timing correct, price should not return to that point because it's already done its damage to the upside. So for example, if you look here, this internal high, this internal high, this internal high got swept right here. So we get that sweep right there. Internal sweep right there. We don't have any confirmations to go short yet in terms of entries, but if price were to run here this high once more, that'd be another internal sweep. But we get the internal sweep right here. And so I'm looking and I'm waiting for the entry to show. Do we get the an optimal entry here? If we return to these highs, it's okay because we don't have our entry just yet. And right now off the bat, this is where I'm looking now. So clearly the higher time frame, 15-minute is bearish. You get that rebalance, disrespected a bullish imbalance, swept highs with clear draws below, equal lows and low resistance liquidity. All this generated liquidity here. And so when you get these confirmations, now you go to the lower time frame and find the optimal trade. What did we get here? We're accumulating and we swept internal highs right here. Internal sweep of all of these highs, formed that high here, and then displaced lower, displaced this minor swing low with a fair value gap. For me, this is the optimal entry right here for this session. We're getting the confirmations and my stop loss goes above the high that swept the internal liquidity. That's what we got. That's the optimal place to place your stop loss, at the high that swept the internal liquidity. We got a sweep. If you have the direction and timing correct, price should not return to this high. It's done its damage to the upside. Now there are objectives to the downside to do damage towards. And so you wait for the entry, you enter off that, and then see what price does. So we'll see how price reacts. There's our entry right there. And let's see. And there you go. Beautiful 3.5 almost R to R there for a very nice move to the downside. The direction's absolutely correct. The timing is absolutely correct, and the levels are correct. Clear draws to the downside, you get the internal sweep, you get the rebalance, you get the confirmations, you get the displacement past the swing point. 15-minute is clearly telling us that we're likely heading lower, clear objectives, clear entry, and the rest is history. All right, so here is another example of how you can utilize context to find the best place to place your stop loss. So what are we seeing here on the 15-minute right off the bat? Price comes, sweeps this high right here, so we have a sweep of liquidity right here. Price then reverses, and what do we see here? We inverse this bullish gap on the 15-minute. And what else do you see? Not only do we inverse this bullish gap, we come and rebalance to this bearish gap here as well. And what else? Where are the clear draws? Do you see it? If I go to the 5-minute, does it become more clear? If you look to the downside, we have clear lows here that have been generated that have gone untouched. We have these 5-minute equal lows, which is the sell side on the 15-minute that we're going to mark out. And we have clear draws to the downside. Damage has been done to the upside. 15-minute inverse this bullish gap, sweep of liquidity, 15-minute bearish imbalance is being rebalanced to and clear draws to the downside. So for us, the framework on the 15-minute makes itself relatively clear. And so we then go and see, okay, do we get an optimal entry with the optimal areas to place our stop? Right now, no, this is not optimal. Unless I get severe and exceptional confirmations, this is not an area where I want to take a trade and place a stop above this high. Why? Because we haven't swept liquidity. We haven't swept an internal high. So I'm going to wait. The damage hasn't been done necessarily yet on the lower time frame, even though we have clear draws. So I would much rather wait and potentially miss out on this move, but wait for a sweep so I can place my stop loss at an optimal area. So I would wait. And so what do we get here? Price returns to these highs, and finally now we get that internal sweep. So here is your internal sweep right here. Swept this internal high. All of these highs here that were generated got swept, got taken out. And now we have the basis for our trade. The 50-minute framework is clearly bearish. Sweep of liquidity, bullish imbalance inverse. Retest that bullish imbalance that has become an IFVG. Rebalance to that bearish imbalance simultaneously, and clear draws on liquidity to the downside for this AM session. So clearly we have the framework here. Now it's about the timing and the levels. And so where do you place your levels? Well, placing your stop here would not be an optimal point if you took a trade. Why? Because we don't have the basis for this stop loss being here, because price hasn't done damage here. But now from this point, you see we've swept this internal high. And now if you have the timing correct, price should not return to this high. If you get the confirmations for your entry, price should not return to this high, because the damage has been done to the upside. And look at the lows we've left behind alongside the 15-minute sell side liquidity there. So if we get the confirmations now for a trade, this is the optimal short. And now you're starting to see it's displacing to the downside. Right here, we have this fair value gap formed. Off that internal sweep, internal range liquidity to external range liquidity right here. And so you get that reversal, price displaces past this minor swing low, forms that fair value gap, and we have clear lows below. Now you're getting those confirmations. So this is what makes it valid. Now you would enter off the fair value gap, place your stop above that high, and target that external range liquidity for an almost 3-to-1 R. Now, why is the stop loss to be placed here? Like I said, the damage has been done to the upside. We've taken out liquidity. We've swept these highs. And we get the confirmations upon this reversal, that displacement, the break of structure, the change in the state of delivery, the fair value gap. That's our entry. Not only that, you paired the 50-minute with it, the confirmations are that we will likely head to the lower sell side liquidity levels. We will head to the downside. So when you get those confirmations, now this is where you will enter on the retest of this gap. You get those confirmations and the stop loss goes above this high, because if you have the timing correct, price should not return to the high here because the damage has been done. We're more likely going to head towards these lows. And so that's the optimal place to place your stop loss. You enter on the retest of this fair value gap right here, and you target all of these lows below, the generated liquidity that has been left behind. And so we see right now, and price comes, and we do take out that sell side right here. For an almost 3-to-1 R, clearly the direction is correct. Doesn't matter how price delivers. If you have the direction and timing correct, price will head to the draws on liquidity. That's what we're getting here. Off the retest of this gap, stop above the high, because the damage has been done to the upside. Clear targets below. So price is more likely going to head to the generated liquidity that has been left behind, rather than the highs that have already done their damage. So I hope this was insightful, showing you where to place your stop loss, where to actually place your levels, and what to wait for to find those optimal entries, to find the optimal areas to place your levels at. So I wish you good luck, good trading, and take care, everybody.